Well, got an interesting article from Zero Hedge. Not surprising, as the stock market was running up to its all-time highs, the Bankster boys at the top, the executives, were selling their shares. Now, you'll recall I did a video telling you, I'm trying to think if it was 2016 or the end of 2015 when I first found this out. But Jamie Dimon, head of JP Morgan Chase, and Lloyd Blankfein, head of Goldman Sachs, of course, Vampire Squid, both became billionaires themselves for the first time ever. And main reason, at least with JP Morgan, and I'm sure with Goldman as well, but mainly with JP Morgan, he had, of course, his nice fat salary, 20-something $million a year, bonuses, millions, et cetera, et cetera, et cetera. But Jamie Dimon also had something interesting, you might expect, a lot of shares in JP Morgan Chase. And I told you, he became a billionaire. He's going to be selling, or was in the process of, selling all of his shares, or most of them. So I don't find it any surprise that, at least according to the Zero Hedge, the end of last year, they were the ones selling while the rest of the sheeple were buying all-time highs. So they have this article at Zero Hedge titled, You're buying, they're selling. Big bank executives dump $100 million in stock as the market was soaring, or as market soared. Shortly after the melt-up in U.S. bank stocks began following Trump's election victory, we noted heavy insider selling and options expiration among Goldman Sachs executives, which, looked like they did that article on November 19th, 2016. So it looks like they got that right. Well, the silver, my mind's in the wrong place. Well, the selling never stopped, as Wall Street Journal reports executives at the biggest Wall Street banks have sold nearly $100 million worth of stock since the presidential election, more than in that same period in any year over the past year? No. Over the past 2 years? No. Keep going. Over the past 5 years. Keep going. Priceline negotiator. Keep going. More. How about 10 years? Let's read that again. The selling never stopped, and as the Wall Street Journal reports, executives at the biggest Wall Street banks, the too big to fails, have sold nearly $100 million worth of stock since the presidential election, more than in that same period in any year over the past decade. So let's stop and chat about this for a second. Or I got an idea, since we can't both chat. I'll chat and you listen, since that's kind of how I do it every day. Seriously. So they have, let's see, I'm just looking at some of these names on here. From the office of the president, whatever. These banks, you would think, the top, not necessarily the banks, but, the boys at the top, the CEOs, the club, or as Gerald Celente calls them, the white shoe boys. They know every single move. How else can JP Morgan have flawless days trading commodities like silver, gold, whatever? Again, and I say flawless, meaning they just never seem to lose. They're always on the right side of the bet no matter what. You follow me? Insider information, obviously. And how about insider information because you're the one doing these things? You can't get any more insider than that, right? So we know Dow Jones has been in that $19,000 range, or 19, whatever. I keep calling it dollars. It is points, whatever. 19,000 points, we'll call it. Plus, we know recently it was almost 2,000 or 20,000. It was 19,999 point something, which, as I said then, there's no chance that was an accident. The Dow Jones is 19,999. They could have pushed it. The club can put it anywhere they want. And I said, I think there's a meaning behind it for the club that maybe it's go time when you see 20,000 Dow. Shortly after that, we're going to have the big crash, etc. Interesting thing is Webbot had suggested that a very, very, very long time ago, many, 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 many years ago. And the club, again, knowing such a thing, would say, well, we're going to push it up to 19,999, but then we're going to just stop because we're not ready yet. Maybe they got a few more stocks, shares they got to get out of. But if it's safe to say they know what's going to happen, they're going to clearly know it in advance, right? So if they know a stock market crash was coming, even in 2017, 2018, I know we're in 2017 now, but we just started. So all of 2017, sometime in that time frame, maybe the end of the year, or in 2018, they would have ample time to get out of their positions, get out of their stocks, get out of their shares, way before everybody else knows what's happening. Oh, the markets are all-time high. Let's keep buying, keep putting your money in that stock market. While they, as it says, more than in that same time period, in any other year in the past decade, these people do not make mistakes. J.P. Morgan, headed by Jamie Dimon, or Goldman Sachs by Lloyd Blankfein, do not make mistakes. They know exactly what they're doing. So if they're selling, that's what the whole point of this is me telling you, if they're selling their shares of stocks, etc., bank stocks, I think more specifically, do you think maybe they know something's on the horizon by chance? Of course, they always get out of the way first. You are left holding the bag. Or, in this case, you're left holding the boat anchor that is solidly attached to your leg that you cannot get off, which is also attached to your 401k. As we detailed in mid-November, while the mainstream media proclaims the surge in bank stocks as heralded a new dawn in everything is awesomeness for America, we note that insiders at Goldman Sachs sold $205 million of stock since just November 8th, by the way, last year. Company filings show. So the banks, which first of all, let's, what is this? U.S. financials. It must be treasuries. Is that treasuries? Yeah. For a minute, I thought it was showing the bank stock chart, exactly how much they were selling and in what time frame. But anyways, that's 3 times more than the group has sold in any month for at least 5 years. Data compiled by Bloomberg has shown. Not a bad week for Mr. Cohn, Blankfein, and Viniar and Jamie Dimon. Can't forget about old Jamie Dimon. And since then, as the bank's stock prices have soared, despite lackluster earnings expectations and a yield curve that did not steepen. It says the Wall Street Journal again reports bankers sold nearly $100 million worth of stock since the presidential election, more than in that same time period in any other year over the past decade. The share sales occurred as financial stocks soared since November 9th on expectations of lighter regulation, lower taxes, and pro-growth economic policies. The KBW NASDAQ Bank Index is up nearly 20% since Donald Trump's victory, about triple the gains notched by the broader market. In addition to the share sales, bank executives have sold another $350 million worth of stock to cover the cost of exercising options, filings show. That is twice the amount sold for that purpose at big banks in the year leading up to the election. And as an added bonus, the post-election run-up in share prices gave value to some options that were likely to expire worthless. At Goldman Sachs Group, for instance, the post-election bounce turned $500 million worth of stock options into winners, some just days before they were set to expire. So who do you think is controlling the stock market? Just days to go and these things are worthless. Whoa. Markets rally. Bank stocks rally. We get to walk away with some additional money. Let's take a look at this little chart. JP Morgan and Goldman Sachs. Look at the jump See if I can zoom in on this a little bit higher, right? Right here, here's the election. And all of a sudden, oh my goodness! Look at the jump. Look at this jump from, what is that, about 68 to about 78 just in a few days. End of the month, it's up to 85. I mean, that's a pretty big jump. And you can look at Goldman Sachs, and it practically, let me look at this, it looks practically the same. But you see the little red mark, as we're getting into January now, starting to come down a hair. But that's okay. I bet they've already sold out all their positions anyways. Doesn't matter. All their stocks, all their shares have been sold. So he says further selling may be in store, and not all big banks have filed reports on selling by all their top executives, by the way. So this number could be far greater. What's more, bank employees typically can't sell shares or exercise options in the run-up to earnings reports. The big banks finished posting their latest round of earnings last week, meaning employees will now, in most cases, be free to sell, which means what? Even more selling of the bank stocks. So maybe it will wipe away all those gains right after the election. Gains which I'm telling you can't possibly have happened by chance. Of course, as you know, nothing happens by chance. It's all planned. They do what they want, when they want. If anyone gets crushed on the side, on the way up or the way down with what they're doing, sorry about your luck. If you're not a member of the club, sorry about your luck, according to them. So those sales won't be as apparent, though, the ones from the employees selling. Banks only have to disclose trades for a handful of top executives, although some rank-and-file employees are paid largely in stock and options. So who is the sucker at this table? Dick Bove gets it. Banks won't be able to hold on to the earnings boost they get from higher interest rates. The hole in the bottom of the piggy bank, as he described it, would be that higher rates would also hurt the value of financial assets held by the bank, thus leaking out any benefits from increasing borrowing costs. But, again, the main point I'm doing this video right now is that not only do they dump 100 million in stocks, but the additional 350 million, like I said here, insiders at Goldman sold 205 million in stock since November 8th. Then the other one, 300, again, in addition to the share sales, bank executives have sold. Notice how it says who sold? Bank employees? The underling? No. The bank executives have sold another 350 million worth of stock to cover the cost of exercising options, of course. They have to get out of the way before the crash comes. And this, again, just my opinion, but I think when we finally see Dow 20,000 to hit 20,000, I think that's the secret little go signal for the club. Shortly, and I don't know how shortly after, if I'm even right, we'll see a crash in stock market. Again, I can refer back to so many years ago when I didn't even really follow the Webbot. I still heard of Cliff High, and he was talking to his friend George Ure, and I would get little pieces of the Webbot updates on George Ure's website because he would talk about things on his website. And, this one more about right report said this and that, but he didn't do summaries or anything like I do. And that's how I first found out about this thing. And I think it was in there when I discovered this conversation he had with Cliff High about the 20,000 Dow or whatever. Or maybe it was Cliff High later. I don't really recall. But that seemed to suggest 20,000 Dow, and then it's going to be good night for the markets sometime after that. Does it mean it could go to 21? Sure. No idea. But I do know that at 19,999 in pennies, that was a sign to the club for whatever the hell reason they needed it, whatever it meant to them. And since nothing has happened yet, market's still rallying. Market's back up again. Dow closed today 113, whatever nonsense points up. Okay. 1990. We're getting close. Are we going to breach the 20,000 mark? At the same time, things I'm reading seem to suggest that if anything really happens, it's going to be way later in the year. That's usually when market crashes happen, September, October. It's pretty historically accurate for that. But I don't know that in previous times they had all the debt problems and issues we have these days with money and 367, whatever hell it is, percent of debt to GDP for the world. You kidding me? That cannot be paid. That cannot be paid, and it's not going to. Has to be dealt with. So again, I see this as the insiders getting out. They're not going to get out at the very last second to where it's obvious. They're going to get out a little bit in front. And yes, the market may rally a little bit more, and they'll be able to say, see, if we were really on the inside, we would have waited to the very last high of the market before we got out. So you won't be able to point the finger at them. But we already know who's behind this, so we can already point the finger at them easily. So that's it for now. Take care.